Welcome back. We have a red day in the markets. Everyone is freaking out because they're finally realizing that the government in the U.S. may be shutting down. We're going to talk about that, Jamie Dimon's continued war on crypto, and much more today on Money Never Sleeps. Welcome back, everybody. Excited to be here with you today. As we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, speaking of sells, the stock markets are selling off today. As of right now, NASDAQ down about 1.5%, Dow down about 1.2%, S&P down almost 1.5% as well. The VIX is climbing up 11% to 18.75. The dollar is like strongly over 106 right now. Tech is getting its shit pushed in just like last week. Oil is back on the move, up over 90 a barrel. Your UVIX call is incredible right now, up almost 14% today. Meanwhile, natural gas is really sticking it to me. I got a lot on my mind right now. It's okay. I got a lot on my mind right now. Things are hot. We're getting heated up here. The market, like I said, finally pricing in the fact that we're looking this like a shutdown square in the eye. We heard from Moody's yesterday. Credit rating could get hit again if we get shut down. Things are so fucked right now, and no one, who could have seen this coming? Who could have seen it coming, Kev? Oh, wait a second. Not us. But dude, now that I've rambled on enough, what has your attention? Oh, we got BitBoy getting arrested. Like I told you earlier, once he has to sell all his crypto to pay his fines, that is going to be the market bottom. That will be the moment of max capitulation, and it's going to be up only from there. I'm just kidding. But what has your attention today?
Well, first off, I'll just say that usually when I make a call, it pumps the next day. And then after that, it's like, okay, that's the move. But yeah, natural gas, I called it and it shot up to $8 that one day. And then with here where we're sitting with the UVIX, that's one I've been keeping an eye on. It just seems like that was a great level of accumulation down once the VIX was in the low teens. I think we're starting to see a lot of the volatility pick up, and we're under some key levels. We'll take a look at some of those, but the major indices I'm keeping an eye on. We're very close to an important level in the S&P. If there's anything that's pissing me off, it's obviously Binance and Tron blockchains. Those prices are absolutely inflated and make no sense to me. And then just kind of taking in what Jamie Dimon said yesterday. I think what he said was really important. You might not like Jamie Dimon. A lot of people don't. I personally just don't have an opinion on the guy, but I do know that he knows what he's talking about. And I think that he made a very fucking good and scary call that the markets probably should listen to. But what do I know? I'm not a financial advisor. I'm just an asshole.
Well, Jamie Dimon's kind of the asshole because now we're seeing that Chase is going to start blocking crypto transactions. So that's fun. I might need to find a new bank, which is just really neat because I would need to transact. And if Chase isn't going to let me, then they can go pound sand.
I got a spreadsheet for you not to open up with certain banks.
Yeah, though. I know, right? Jesus Christ. I hate it. I hate it so much. There's no better way than this for us to transact. Like, it just drives me crazy. Anywho, we don't need to spend too much more time on that. So another day closer to a shutdown. It doesn't really seem like we're getting any headway on a deal. And even if we did get a short-term deal, it would be 4 to 8 weeks and we'd be back in this exact same situation. So it's really not good. People are moving to the dollar for safety right now, which is wild to say. Bond yields, people have been selling some bonds. Yields haven't really, they're taking a little bit of a run up, like the 30 years up almost 1% today. If we look at some of the shorter duration, they're up as well. So you could get a 6 month at 5.58%. I made the call almost 3 months ago that 6 month treasuries would outperform the crypto market for the remainder of the year. People were calling me crazy. People were like, oh, everyone's been saying that and it hasn't proven true. Since that time, the crypto market as a whole is down 11%. Bitcoin is down 14%, and I am cozily sitting with a bunch of money in some 6 months because when I said that, I was like, I backed it up with action. So, I sold a bunch of NVIDIA and moved what the tax liability was going to be into a 6-month treasury just to gain a little bit of interest there. But we're going to continue to see this, man. Like, treasuries are going to outperform when rates are this high. Like, there's nothing wrong with like a 6-month treasury or a 6-month CD, whatever it is. If you can find a high yield savings, like, man, this is just time to protect your fucking capital. Like, please, for the love of God, protect your capital, protect your capital, protect your capital. That is the name of the game at this point. Otherwise, you could be really, really screwed. So, curious, what else on the news front has been getting your attention today, Kev? Anything, macro wise that you're seeing?
In terms of macro, not necessarily. I do want to just circle back to Jamie Dimon's statements that he did make yesterday, talking about
Okay.
the world not being ready for rates at 7%. I think we mentioned this a long time ago. I haven't really brought it up again though, but we were anticipating that rates were going to be a lot higher than they're projecting, right? And the main reason of that was probably going to be because inflation was going to spike up, or we're going to see something that causes this to take up once again. But this is just from Bloomberg, and it's pretty interesting. He said that if they're going to have lower volumes and higher rates, let me just highlight this for y'all, there will be stress in the system. Diamond said while visiting Mumbai for a JP Morgan Investor Summit. Warren Buffett says you find out who is swimming naked when the tide goes out. That will be the tide going out. And that's a really interesting thing that he said there because, yeah, if there's no volume coming into the market and the rates are consistently high, that just means there's going to be continued stress putting on these institutions, the institutions that are supposed to be fucking buying the dip that are going to, skyrocket. That's the BlackRocks of the world and the investment banks. I don't know if that's, Jamie Dimon's a smart guy. You can hate him or love him, but I actually agree with him here on this. And then he also said that something very similar to what we've said in the past. Diamond, who said, rates may need to rise further to fight inflation, added that there's a difference between 5% and 7%, and it would be more painful for the economy than going from 3 to 5% was. And that 100% is very similar to what we said about the inflation battle, where it was really easy to go from 10% down to 5%. But 5% down to 2%, it's going to be an absolutely, it's going to be so hard to get there. And these kind of go, hand in hand together because, hey, rates need to go up higher if we want to see those that inflation number come down. But at the same time, it's like it's going to be a tough battle on the consumer and institutions trying to get to that point, both in that rates are going to have to continue to go higher and also inflation is going to have to come down. But there's something's going to break here, and I think he kind of recognizes it. And I think he's kind of pointing and hinting in this, in this entire article. If you haven't read it, you should go read it. It's really interesting. There are going to be a lot of issues for some of these smaller banks. And the reason I bring up Jamie Dimon, I'm focusing on him, is because we do know that JP Morgan is notorious for buying out these banks. If for some reason the Fed and the government, they love brokering deals with them so that they can, acquire all these assets, whether it's Bear Stearns, Washington Mutual, First Republic, Signature, whichever one they did buy earlier on this year. It just seems to be that's the game that's being played, and I think this guy is calling bullshit on a lot of these institutions that are saying that they're solving right now.
Yeah, I can't disagree with him on that one as much as I don't like his stance on crypto. Okay, so
Sure.
I don't think that this is the time to be buying the dip on a lot of this stuff. I think the dip continues. We've seen the levees break, and what's going to plug those up anytime soon, right? Like if you've seen the movie Vegas Vacation, this is like when Clark is inside trying to stick his fingers in all the holes, plug the water. And I don't think that we can really do that right now. But there are going to be some here in the near future that present some value to us. God, the VIX is almost at 19 right now. Look at that green candle. That is just delightful. Anywho,
Damn.
when we look at some of these charts, we're not going to be buying Netflix anytime soon. We're not going to be buying Tesla.
No. Not at
Because
all.
there is still a lot of concern, and add into that, more issues with China. There's always something with China. That's always the boogeyman in the room, whether it's chip stocks, EV stocks, literally anything. We talked yesterday about student loans and how much those are going to be impacting people's buying power and disposable income. Do you think there are any opportunities? I kind of listed off yesterday what the areas that they're expecting that people said they would be cutting back on. It was apparel, footwear. accessories, restaurants. What sort of, are there any companies that you think are worth shorting right now? And can we look through some of the charts to maybe see where some of these would be? Because when I think about it, I look at companies like Nike. Is Nike going to take a hit? Are they going to have issues with, people? Are people going to be buying $200 Jordans when they can't afford to pay their rent? I don't know. So I'm wondering if there are companies like that where it's worthwhile to take a look at some of these options. And then, as well, like we're seeing more speak today that like, hey, listen, the Fed only doesn't care about the cost of fuel and of energy and food, but consumers do. That's going to play a huge impact too into what the Fed's policies are. Like, I'm just curious, can we come up with some actionable items? Not that people need to go enter like high leverage shorts. I'm not talking about that, but like anything actionable that you see right now outside of the few plays that you've made lately.
Yeah, absolutely. So I mean, you brought up Nike, and Nike's actually been fucking getting rocked. Like it's been terrible for
Okay.
Nike this year, and it goes for a lot of these companies. Like again, I was thinking about shorting Nike back when it was around 130. Probably should have. Fuck, look at that. But here we
Oof.
are, and
Maybe
on the
now's not the
weekly.
time to short.
But here's the thing, though. I honestly think there's a lot of bad things, ahead for Nike. Obviously, yeah, the younger generation are the ones that are going to be buying them. They tend to be in college or out of college. They probably have that debt of student loans, right? Or their parents are probably not going to want to buy their fucking kids a pair of Jordans at this time, especially if they're also facing some hardship too. So we have to keep that in mind. We also know that the youth unemployment rate in China is increasing, right? That they're not saying that it is, but we do know that it's an extremely high number. And if that's the case, then okay, then there's going to be a lot of manufacturing issues that like he's going to be facing. I know they have factories in Vietnam as well, so maybe they outsource there more often, but it's not going to be the same level of manufacturing that we're getting out of China. So there's a lot of things that are facing them that are not necessarily the greatest thing in the world. And again, we just got the weekly death cross. So yeah, is this possible that it can go down a lot lower? I think so. Obviously, again, not financial advice, but I'm just looking at this trend line here. Let's take a look at that. It's kind of, I mean, we're kind of at a key level of support right here, right? If we break through that resistance, we're probably going to come down here, test maybe this low back in September of 2022. If we lose that, I mean, somewhere between $66 and $59, $60 is possible. And I again, I think we're seeing a lot of things move really fast with anything really breaking. And when something does break, there's a good chance that this could absolutely just get out of hand, and it can get out of hand really fucking fast. So I said that the COVID low might be, the low for a lot of things. I said that for about a year now. I think for the major indices that it's very possible, especially with how we're seeing some things perform. But if it gets out of hand, some of these individual stocks like a Nike or I don't know, I'm trying to think of other companies that are traded, say a Chipotle or something like that. I have a position at Chipotle. It's very possible that these could fucking just start tanking hard as shit. And again, this kind of goes back to what Jamie Dimon said. Volumes are low and the rates are continuing to stay high. We know that there is going to be less liquidity in the space, and the liquidity is going to have to come from somewhere. And the only golden opportunity I see right now, and again, this is not financial advice, it's just me saying this, I see a lot of money still in the market. So I wouldn't be surprised if people start pulling out of these stocks, and especially if these institutions are invested in some of these, we know that they're probably going to try and get out of there as soon as possible. We've even seen it from the top down, right? We've seen Kathy Wood selling fucking a ton of Tesla recently. We also saw Jensen Huang, offloading a lot of his stock of Nvidia. I don't care if he's got so much, a ton that doesn't even matter how much he's selling. These people are selling, so they're definitely pulling liquidity out of somewhere, whether that's just to prepare themselves for what's coming, or just to make sure that they are not holding these massive bags that are going to be down bad in a few months. But yeah, Nike is one that obviously this is a trend line you want to see. If it loses this trend line on the weekly, then it's a good chance that it's going to continue to go down. I honestly do believe it's going to continue to go down. If I'm looking at this rationally, this looks like a three-wave move. So wave A, wave B, wave C coming down somewhere around here. But there's a lot of things you have to keep in mind, and they have to be in the back of your mind when you're looking at some of these. So Nike's one. Let's look at Chipotle, because that's again one that
Real quick, I also want to bring up the fact that I'm looking at the rate probabilities for Fed hikes the rest of this year. The market still hasn't priced in the fact that we're probably going to get another rate hike. Like I'm looking at it for the November meeting, it's 75% chance, according to these probabilities, that there is no rate hike. and 60% chance that there's no rate hike in December. Meanwhile, we have
That's
PCE data
stupid.
coming out on Friday for the month of August. August prices were impacted greatly by July energy costs. The price of in the month of July alone, first off, WTI crude was up every single week in the month of July. We saw the
Yep.
price of oil increase in July by 15%. 15% in that 1 month. Those costs are going to be trickled down. They're not going to just like eat the price of that. They're going to pass it on to consumers. And that is going to show up in August data that we get on Friday. So whether or not the Fed wants to say that they strip out energy, guess what? That doesn't get stripped out of what consumers have to fucking pay. So I think we're going to see I'm curious. I don't know yet if they've posted what the expectations are. I'm going to pull that up as I speak. But we're going to see another month-over-month increase in PCE. Right now, they're expecting it to be flat for both. They're expecting core to be flat. They haven't put out an expectation for, including food and energy. And they're expecting core year over year to be down to 3.9% from 4.2. I don't buy it. Like, I just don't buy it. And I think we're going to see a hot number on the non-core side of things. PCE, that number was down to 3.3, and everyone was victory lapping that. Everyone was losing their shit because PCE was down to 3.3, and we're on our way, and we're almost there. Well, guess what? It wouldn't surprise me if that thing was above 3.5. Like, what if that comes in at 4? What if we see a PCE of 4? The Fed can't ignore that as we only give a shit about the core number. Fuck all the way off, okay? Like, that number is coming in hot on Friday. I'd be very, very surprised. And the market is going to have to price in the expectation for another rate hike on top of the fact that if Friday could be an absolute bloodbath. I can't believe you have to go out of town on Friday. We got to do the show early because it could be an absolute. It's the monthly close. It's the weekly close. It's a government shutting down. It's a PCE day. It could be fucking brutal the rest of this week. Like, hold on to your tits, everyone, because we could get absolutely fucking rocked.
Yeah, good thing I got some big tits to hold on to. I'm talking about myself here. I don't know. I was just trying to say something funny, but I'm kind of sad that I'm going out of town Friday. I'm gonna try and get on the show because there's so much shit that's coming up, and these markets are just not pricing in. The markets are really irrational, and I'm talking about like retail investors more than anything, and people who are obviously managing a decent amount of money, right? So some of these hedge funds, people are definitely investing a lot of money into the market, not necessarily institutions 100%, because I think those are a lot bigger than a lot of these funds. But we are definitely at a place where they're not being rational, and the market is kind of at a place where the Fed and the US government are like, hey, this looks pretty fucking bad. We're going to try and keep everybody calm right here. And if it goes, everything goes to fucking hell in a handbasket. I don't know. No, I was trying to think of this another saying, but if we end up there, then the government will be shut down, and we'll just let the market fucking figure out what it's doing. We're already seeing a bit of restriction on cash flow with JP Morgan saying like, yo, we ain't gonna help you with your crypto transfers anymore. Next few things that we'd have to keep an eye out for are the banning of short selling or restrictions on that. And it's kind of wild because the last time we got a massive dump in the market, back in 2008, there was a deal that the U.S. government was going to bail out a lot of these banks, and it took the second time around for them to bail them out, and that first time just tanked the market even more. So I don't know. There's a lot of shit just lining up here, and I don't fucking buy it one bit that this is going to be good. And again, we're ending the quarter. We're going into Q4. I think everyone's bullish going into Q4, which makes no fucking sense to me at all. But to each their own. I'm well positioned right now. I'm confident that I've done all the hard work these past few months, past year, and I hope everyone is just safe, if anything.
Yep, stay safe out there. Let's wrap this up by looking through a couple charts. We got to look at the dollar. Yeah. We got to look at the VIX. We need to look at Bitcoin. I think those are probably the main three for us today.
For sure. I do want to pull up Chipotle too, just because that was the call that I made, and we're getting closer. We're getting closer to that strike.
Jesus Christ, the dollar. is just kicking ass and taking names. The euro can suck it.
Remember when everyone was saying that the
God, look at the euro dollar chart. Yeah, everyone's saying the dollar was dead. Look at it on the weekly. Just obviously the inverse of what the DXY chart looks like. But it's
look at that. It was bear flag and bull flag. Completely opposite. And look what's happening. Now you're getting a death cross on the Euro USD pair very soon, right? Look at that on the daily. It's going to happen by the end of this week. Interesting. But yeah, this is a really weird place for a lot of currencies. Everyone was betting against the dollar. We do know that the dollar is a safe haven for most people, and you don't know where to put your fucking money, right? I think a lot of people feel more comfortable with the dollar than they do Bitcoin, do some other risk assets. Sure, you can make money, but you can also lose a lot too, right? Dollar is going to be it's just that mentality of $1 is equal to $1. You might not be, your purchasing power is going down, but the actual value in your bank account isn't. So I think that's why a lot of people are also moving over here. And again, money markets are absolutely kicking ass. I would be happy with somewhere in the 5% range just to be making money. I don't have any right now, but I do understand that that type of safety, preserving wealth, like we were just saying. But this is kind of giving the game away, in my opinion. I think that the markets are getting fucked because the dollar is just so strong right here. And if it continues to be this strong, then guess what? Risk assets are going to continue to dump here. So seeing this, I think that we are going to probably be going close to this 107.193. We might get a bit of a retracement fairly soon. Maybe we get rejected off here before continuing up. Again, we are pretty overbought on the daily. Could be more overbought, but if we look at the monthly, we're just getting started, boys. So yeah, that's what I'm seeing here, and
you guys have no idea.
We're probably going to be getting super close to some of these higher levels. Do I think we can do a double top? I think it's possible if we start breaking some of these levels of resistance. Yeah, absolutely. Can you imagine if we fucking start going above this? That'd be absolute chaos in the markets. You guys wouldn't even understand how bad it would be. Fucking the S&P would be down in the 2000s. But yeah, so let's that's a dollar. You want to take a look at any of the major indices real quick?
Yeah, let's do it.
All right, let's do the S&P real quick. Again, look at this massive red candle on the monthly. This fucker is down so bad. I was talking about it before the show with you. We're down 7.26% in the past since the July high. So that's wonderful. I think we're at a key level fairly soon. Obviously, we're testing the 200 EMA on the daily. It's 42.64, this yellow line here. Do we find any support? Possibly not. It really depends. I think that there's a lot of news that is affecting the price action. And if that's the case, then I think we need to be cautious of technicals and, kind of make any judgments or assessments based off technicals mixed with sentiment in the news and seeing also where money's going. But I have this level down here at 42.49, which 42.50 we can call it. I think if we start seeing closes below that, the machines on some of these institutional desks are to start selling off the S&P, because once it gets to a certain point, it kind of tells you that we're in an impulsive move down. And I think that's a really important level, just like this level, 43.5 was really important, right? It was putting us right around here. And since 43.5, we've probably put in, let's see, where's ruler? There's ruler. 43.5, where are we? Here we are. We went down roughly about 1.75%. So, and it's pretty fast too. It's only been 2-3 days since that's happened. So if we continue on this path, if we lose the support here at the 200 EMA, that 42.5 is going to be a huge level you want to keep up. Maybe we get a small bounce there, but again, I think we're at a place where we get small corrective moves and more impulsive ones in the way of the trend, and we all know where the trend is going right here. So the S&P is kind of a scary one to be watching right here. I think the VIX might get crushed a little bit, brought back down, just so we see a little bit of a bounce, but then I think it's going to pick up as it continues below this level. Losing this level is going to be really important, so keep an eye on that. The NASDAQ, what the fuck's going on here? Down 230 today. This is that's not a good number, but we're starting to see. It's not a good number, guys. I don't know if you knew that, but yeah, we closed below this wave one already, or we're below this wave one. So it's a pretty good move. It's a pretty good sign that we're continuing to push down. Obviously we start closing, somewhere if we could lose this 14,416 level, which is, not too far away, it's about 100 points or so away. You start losing that. That's a huge level of support that we've had in the past. If we lose that, we're probably going to be testing this 200 EMA down here at 14 flat. And, maybe we find this as resistance on the move to the upside, and then we continue down. I think it's safe to say we're in a downtrend here, right? I'm not getting ahead of myself. I think that it's pretty obvious now that we're starting to get some closes below the previous lows in this market. So I think that this is something that you have to keep an eye on. And again, if we look at these on the fucking monthly, guys, we're completely overbought. So, we got the monthly close Friday. It's going to be really interesting to see how that plays out. But again, if we get a monthly close below that level down here, that'd be absolute chaos. So keep an eye on the NASDAQ. That's going to be the one you want to watch. A monthly close below 14,416. Dow, again, we're already below the point where I think the Dow needed to close above. That was 34,347. We're currently at 33,594. I mean, we're down a lot. The Dow is down a ton. It's broke out of this channel. It's probably going to be on the monthly looking to test this 31,184 at some point in the near future. We can see that it's completely overbought. But on the daily, we can see that we are in a level below the 200 EMA. And that is not a good sign, because if we continue to close below the 200 EMA, no different than what's happening with Bitcoin, with XRP, and the Euro USD pair, you're going to get a death cross. And I'm going to play the video, and JWeb's going to smile. And guess what? We're going to see another push further down. And again, that push down probably going to be the origin of this bear flag, and that's going to be somewhere around 31,422. And again, what did I say on the monthly? 31, where are we here? 31,227. So in the same ballpark, within a 200 point range right here, it's going to be an important level. If we don't hold that, then you're going to be going down a lot lower. So keep an eye on that. But yeah, these indices are looking like shit, and I think finally we're calling bullshit. And the reason that a lot of them are dropping too are because a lot of these major stocks are just finally starting to, eat some shit. Apple, obviously, doing pretty bad the past 2 months for these closes. Netflix, absolutely abysmal, fucking terrible for Netflix. Look at this. So, and there's a lot of room to the downside too still. So it's really interesting to see how these are all performing. I don't necessarily buy any of this stuff like that we're going to the moon in October. That October's going to be up only. I think we are going to see a correction, but it's going to be so short term. It's going to be just another opportunity to exit positions. That's just my opinion. I don't have a crystal ball. I can't tell you if that's true or not, but I think that it's going to be Bloodtober as opposed to Uptober. I think that's just bullshit and it's hopium. And it's almost as blatant as day now that this market is, bleeding out pretty fucking bad. The question is, how bad is it going to go? Well, nothing's broken yet. And if we're seeing this beforehand, there's a good chance that when something does break, you're not going to see a lot of liquidity out there. So just keep that in mind. But yeah, that's the major indices. Nothing too crazy on there. Obviously, it is crazy. It's down 400 points in the Dow today, down 230 in the NASDAQ. But that's it is what it is. So let's go into Bitcoin, because that's obviously one that we're still keeping an eye on. Got a bit of a move down actually from yesterday. It shot up a little bit, liquidated a few of those leverage shorts, and now we're seeing that we're continuing on this downtrend here. I think that we still need to finish this move out to the downside. Roughly around 23,629 is my level. That's a bit of a conservative level. It can go down to 22,000. That's very possible. And again, what we're not accounting for still is a capitulation event, right? And I think we're on the cusp of one, and we're kind of we know it's coming.
Just over 19, by the way.
Wonderful. That's fucking exactly what we want to see. Yeah, volatility's back. I think VIX below 20.
Back.
Any
We're
of that?
So back.
Like I'm not telling you what to do at all with your money, but I think that the VIX below 20, especially below 15, was a good level to start accumulating a position for the VIX. Again, where could it shoot up to? I think we can look at history and decide that. But back to Bitcoin, I think that this here has to continue down just a little bit more. Maybe we get a bit of a bounce. Maybe. And again, maybe is going to be an important word here, because I honestly do believe that there is a capitulation event for crypto. It's, we're very close to it, probably closer than most people expect. And I think we all know what it is. It has to do with a certain exchange. But yeah, I mean, this is just, this, I said yesterday, these volumes are sad as fuck. I don't see where the money's going to push this market up unless it's stable coins. I don't see anyone coming into crypto. This JP Morgan news is not great for crypto as well. A lot of people are capitulating here, and I think a lot of people are actually getting even more bullish here. And I mean capitulating, I was talking about Ben Armstrong, but right here, this is like a really wild spot because I'm seeing so many people that are looking at the bullish catalyst, but they're not taking into account credit and liquidity, which is the most important thing. I don't give a fuck. The halving is literally halving of your net worth. That's the only thing that's going to happen. And when it comes to the Bitcoin halving here, so down more just so we can finish this, and then obviously we have a little bit of a bounce. This could honestly still go up a little bit more too to this 28.5. We do know that there's liquidity in this range. The question is, do we have the amount of powder to push this price up? I don't know. I mean, this could easily be right here, A, B, C, somewhere up there, and then we get 5 waves down, right? 1, 2, 3, 4, 5, and that takes us right there. That could be a situation that plays out. Then we get a head and shoulders right here. This would be so fucking drawn out. Hopefully it doesn't play out that way. Hopefully the market decides to make a move one way or the other. But yeah, Bitcoin, obviously key level that we're going to want to watch are 25,284. You know that, the orange line down here. And then up here, I'm just going to say 28.5. Those are the 2 levels that you're going to get your confirmation of the next move, depending on where it hits or where it's close to. So keep an eye on that. What else do I want to go through? Not too much. Just take a look at some altcoins real quick. You can see here is Matic. We haven't talked about Matic for a while. It looks like it's kind of consolidating, going sideways here. Again, with Bitcoin's dominance, if that decides to go up here or go down from here, this is one that's probably going to continue its way down. I brought this up because our level is 30 cents, and that's coming up pretty soon, December 5th. JWeb and I for a $100 bet. Let's see if we get there. Capitulation event would absolutely bring us there in a matter of days, maybe hours. But we'll see on that end how that plays out. ETH, tons of ETH has been thrown onto the exchange lately. A lot of people haven't realized that, so that makes me still believe that maybe there is one more pump in this market just so they can dump from higher. Because for the amount of ETH that is on exchanges right now, it doesn't make sense that the market hasn't absolutely sold off more. So that's just one bit of hesitation that I do have. I think that, again, maybe we revisit some of these levels, but I think the key level, if we do see a sell-off, is probably going to be closer to this 1463 level down here. That's going to be the next target. On the macro, obviously we're going to hit some of these targets before then. Then XRP, just want to pull this up because this is close to another death cross here. We're very close on the XRP chart. Continuing closing below 200, going to get a death cross. Let's take a look at KuCoin real quick. Look at this fucking chart from KuCoin. Yeah, these exchanges, if this capitulation event happens, a lot of these exchange tokens are going to just absolutely eat shit. It's no different than what happened with FTX and FTT. Keep an eye on that. And the last one we'll pull up is this motherfucker, which I always bring up, Binance. The monthly close for this one is so important. If we close below this yellow line, 210.2, that's great. But I do want to pull up this 15-minute chart that we saw last night. And I want to show you what a market maker pattern looks like. There it is. Look at how fake this growth is here. Shot up, consolidation, shot up, consolidation, shot up. And now we're putting in our corrective pattern here. That is 100% the markets. Someone with a lot of money who's able to move the price in a certain way, they just twop by and it just shoots the price up instantly. And the next thing you know, it shoots up again. Consolidation shoots up again. And they're probably taking profit every opportunity they can once the market, pushes up a little bit higher. So we're in a place where there is still tons of manipulation. That's why the price in crypto is a little bit wild right now, as opposed to what we're seeing in TradFi. I do think that we are getting close to the end because can't really hold this up much longer. So right now, I think that crypto is going to see either a violent move to the upside just to sell from higher, or it's just going to say, you know what, fuck this. DOJ is coming after who, and guess what? We're down to 20,000 before you know it. So that's all I got for crypto. Obviously, can't really give you much more unless the markets decide to move a little bit more. But yeah, we're just kind of waiting for the next move from Bitcoin that kind of decides where everything else is going to be going.
All right. We're going to wrap it up for today. We're seeing more blood as the markets begin to close. NASDAQ now down 1.6%, S&P 1.5%, VIX over 19. It is it's going to continue. I think, like I said, there is just a perfect storm of absolute shit coming at the end of this week between the government shutting down, inflation data that I think is going to come in hot. Like, I don't know, man. Maybe
that's why they're shutting down, right?
Yeah, right. So I'm just trying to think about how I want to play this, because I do think that there is a short-term play in there. We can discuss that more tomorrow. Appreciate everybody for watching. If you have not yet, hit that like down below, subscribe to the channel. drop a comment, share us out on social media if you enjoyed it, whether it's the advice you enjoy or the rants that we go on. They're both appreciated. Have a great day, everybody. Stay safe in the markets, and we'll see you tomorrow.
Take care, everyone. Thanks for being here.